Bitcoin is trading at $79,000 right now, hovering just below a number that most people watching the charts have never heard of. It's called the short-term holder realized price, and it sits at $81,500. That's not a random technical line drawn by analysts. It's the average cost basis of everyone who bought Bitcoin in the last 155 days. The new money. The people who came in during the recent rally. And right now, Bitcoin is testing whether those buyers will hold or fold. Here's why this matters. When Bitcoin trades above the short-term holder cost basis, it means recent buyers are in profit. They're comfortable. They're less likely to panic sell. The market has support. But when price drops below that line, those same holders slip into the red. Suddenly, every bounce looks like an exit opportunity. Selling pressure builds. The whole structure weakens. For the last few years, this metric has defined the line between bull runs and corrections with startling accuracy. After the 2022 crash, Bitcoin spent months below this threshold before finally reclaiming it in early 2023. That reclaim marked the beginning of a 30% rally. Now we're at the threshold again, but from the other direction. Bitcoin briefly climbed above $81,000 yesterday for the first time since January, fueled by strong ETF inflows and falling exchange supply. But it couldn't hold. The question is whether this is just a momentary dip or the start of something worse. The next level everyone's watching is $92,000. That's where longer-term holders who bought 3 to 6 months ago have their cost basis parked. If Bitcoin can reclaim the short-term holder line at 81,000 and push higher, 92,000 becomes the natural target. Breaking above that would put the majority of all recent buyers back in profit and likely trigger momentum buying. Analysts at firms like Bernstein are pointing to this exact setup, arguing that if support holds here, Bitcoin has room to run towards six figures again by late 2026. But if it breaks down? The next major support sits around 76,000, where long-term holders who've been holding for over a year have their average entry. A drop to that level would mean every single person who bought Bitcoin in the last 6 months is underwater. That's when capitulation starts to feel real. What makes this moment particularly tense is that short-term holders now control a larger share of Bitcoin's circulating supply than they have in months. They're the swing vote. Their behavior in the next few days will likely determine whether this recovery has legs or whether we're headed for another test of lower support. The cost basis line at 81,000 isn't just a number on a chart. It's a psychological threshold, a profit and loss boundary for hundreds of thousands of investors who bought the recent dip. And they're all watching the same price right now, deciding what to do next.